learning to let go. And what I mean about that is I have clients I've worked with for a while and that are, just fixed annuity buyers and that's it. And they will never learn. And it ends up becoming time that will not yield anything other than, emotional touch feelies, right? Which are great. This is one of the reasons I got in this business was to connect with people and help them in some of the more critical areas of their lives. But I have to pay the bills too. They don't give me this office for free. So having to have those conversations with people saying, look, I'm hyper aware and very sensitive to your approaches, your fears, but you got to also understand that we are now trending in a different direction. And so, you might want to meet me halfway here as far as looking at alternatives to meet the same risk tolerance, but with a different avenue.
What's up, everybody? Welcome back to another episode of the Big Hitters Podcast. I'm here with Boris Castillo. Boris is a CFA, a CFP. He is the founder and owner of Amenity Wealth. He works with business owners. He is a financial advisor. He's a financial coach. Boris, thank you so much for joining us today.
Andrew, thank you for having me.
Well, hey, man, my first question is always the same question. Who are you and how'd you get to where we are today?
So who am I? That's always the hardest one to answer, right? If I had to characterize myself, I'm a perpetual learner, always a student. I love learning new things, languages, concepts. I was already in production and had already like my VP and all that stuff before I decided to go for my charter. And the reason I did that was because it seemed so arcane. It seemed so, I don't know, like an Indiana Jones type, treasure trove of information. And it helped me feel a little bit more confident. So that's one of the reasons why I, kind of continued it. And it's kind of always been par for the course for me. So, for example, my ex-girlfriend, she and I learned German together. I know Spanish and French because they're easy. So that would be who I think I am, a perpetual learner. How I got here. Well, I started in the 90s. I'm dating myself, but I started then. Back on the dot-com bubble. And my sister was in this industry. And I got my degree in humanities. I studied Greek and Latin. My minor was finance in case I needed something to fall back on. And thank goodness I did that because no one's making money off Greek and Latin anymore. And so she left the industry, but I continued. And I started in a small boutique firm, and I've worked in the wirehouses, mostly banks and credit unions, so financial institutions. And I went independent 3 years ago, August 15th, 2022, in the middle of that, with the first down market we've had since 2008 in the S&P is when we decided to open our doors. But hey, Wellington Management opened in 1929, so.
That's amazing. So, and it looks like you're primarily focused on business owners. Is that correct? Is that your kind of target audience?
Yeah. I mean, I've worked with clients, from, executive C-level guys all the way down to widows. But the reason I like business owners is, number one, you can get lost in the weeds with financial planning and financial services. You can sit there and nitpick. Business owners understand the pragmatism of a decision has to be made sooner rather than later. So they understand there's a threshold of information that's good enough. So that's the other reason I like them is that they're the cycle is a lot shorter, and the concerns, even if they're in different sectors, are still very similar. Generally speaking, business owners are looking either to make this a lineage type of enterprise, or they're looking to sell it later on, right? In which case they have to worry about how do I do that? Long-term capital gains versus taking, over several years versus taking it all in 1 year. So that's one of the reasons why I like it. Plus, there's a lot more you can do with a business, a lot more you can leverage, and a lot more planning you can do that you just can't do with, W-2 employees.
Have you noticed a niche or a trend with the types of business owners? Is it kind of all over the map, regardless of industry?
I'd say it's all over the map. Yeah. I mean, it's anything from, I mean, because of where I started, I used to work with another bank that was in right in front of the Calmar in downtown Los Angeles. The Calmar is the fashion district of it. So I'd say of the business owners, a good portion of them, if they were all together, are all in the clothing industry. But outside of that, what consultant engineers, either in oil and gas or in aerospace. Um, and a lot of retirees now, since I'm getting up there myself. We helped build them up to that, and now we've launched them into retirement. And yeah, so I should go and do a demographic breakdown, but we've been really busy lately, as you can imagine. I think every advisor's
I
been.
bet. I bet. Yeah. So the concept of this podcast is the Big Hitters Podcast. So give the audience some sense of your production, whether that be your top line revenue or your assets under management, like whatever you feel comfortable sharing, just to understand like your production.
Gotcha. Well, it's a feast or famine kind of business. So I'm not in the, we're just shy of the nine figures, which everybody loves is the magic number as far as assets under management. But the problem with that is that's also a bit misleading because it comes down to asset mix. Since a good portion of my career was spent with banks and credit unions, the cost of client acquisition there is much lower. But the problem is that so is the risk tolerance. So you end up doing a lot of fixed annuities, fixed index annuities. Fixed annuities don't pay any trails, right? Fixed index annuities, some do, some don't. So because of that, our trail revenue is not what it should be. We're spending a lot of time trying to convert people over, right, into fee based, and some are understanding the transition and the need for it. Others, if it's not broken, don't fix it. So that can be a little frustrating. So we in between organic growth, the referrals we're getting, we're on a good enough trajectory. We've been growing double digits since we opened, but it's really, really frustrating when you have to do all the service work and deal with 17 different carriers. They all have their own forms. They all have their own idiosyncrasies. And that takes a lot of time. I envy the fee only people that have, one or two service providers. And so they don't have to go to so many different places to get something done. Like, can I please take out my RMD?
So what are some current like sticking points in your business right now? Like what is keeping you up at night? Every business owner at a phase in their business is hitting some sort of a pain line or a threshold that they're trying to break through. What is that for you right now?
Learning to let go. And what I mean about that is I have clients I've worked with for a while and that are, just fixed annuity buyers and that's it. And they will never learn. And it ends up becoming time that will not yield anything other than, emotional touch feelies, right? Which are great. This is one of the reasons I got in this business was to connect with people and help them in some of the more critical areas of their lives. But I have to pay the bills too. They don't give me this office for free. So having to have those conversations with people saying, look, I'm hyper aware and very sensitive to your approaches, your fears, but you got to also understand that we are now trending in a different direction. And so, you might want to meet me halfway here as far as looking at alternatives to meet the same risk tolerance, but with a different avenue. So that's the hard part because more and more the reading I've done is that you can reach a threshold where you have too many clients and you need to snip them off. And then that does allow for more growth because now you have more time. And I've seen that firsthand. One of the things that handicaps most advisors that come from these financial institutions is that they get a lot of referrals, which is great. Cost of client acquisition when you're independent is, of course, much higher. But you're also a general practitioner, right? You can have an incredibly risk-averse widow here and a very risky 40-something, 50-something that wants to retire early and understands, hey, if I bought NVIDIA back then, I'd be doing a lot better. So you then start to realize when you go independent just how much time you were wasting with some bad referrals because a lot of these banks and credit unions, they incentivize their bankers to give you referrals, which sounds great. You tend to think, okay, well, great, I'm getting referrals. But when you see it from the banker's point of view, hey, you're like the 18th checklist I had to make this today. And yes, I will not hit my bonus unless I send you 2 referrals. Do me a favor, okay, these 2, even though we used to call them, just dead wood, right? They have no interest, they have no assets. But can you please just talk to them, see if they know anybody, and then bona fide the referral. You'd make that as small as possible, but you multiply that by several branches and several bankers, at least once or twice a quarter. It takes up a lot of your time. So I have seen firsthand that time is our only asset, right? Time is the only asset that a financial advisor has in terms of growing their practice. But then when you get the client and you've dealt with them a while, and now they become more of a time drag, and there's no revenue there to offset it. Yeah, that's not easy to do. Because you don't want to feel like you're abandoning them, especially if they're already in retirement.
Gotcha. So it sounds like you're just trying to have a balance with the clients that, basically there's not some sort of recurring revenue to support the ongoing planning.
Precisely. I mean, especially, one of my favorite clients is finally beginning to do it. He had nothing but fixed annuities, and we're talking, a couple $1 million in fixed annuities. And now he's beginning to understand, oh, this is why you wanted me to do those Roth conversions back then. I get it now. And now he's kind of kicking himself that he didn't do it sooner. But the old saying is true. It's hard to teach an old dog new tricks, especially when it comes to this industry. Money is something that's so complicated for everybody, right? There's nobody that doesn't have some sort of attitude toward it, and it can make one feel vulnerable. So the conversations that you would have around money aren't necessarily the same ones you would have, let's say, if you were an attorney not dealing with money, let's say a real estate legal matter, or if you're a doctor dealing with somebody's health. While they still have similar urgency levels, they don't have the same attitude toward it. So yeah, I think they're starting to see exactly, why you're coming across with the ideas that you're coming across with, because sometimes people have trouble losing that initial hesitancy. I mean, I have clients that I've been working with for over a decade, and every single new idea, it's as if it's the first time I'm talking to them, which is really interesting. You would think you build up some goodwill there, and for 99.9% of our clients we have, but there are a couple that's like, okay, here we go again.
Artificial intelligence. How are you using it now? Where do you feel like you could be using it that you're not?
We are so far behind the 8 ball on that. For example, we just got, we tested out that Jump AI. My first thought is, where have you been all my life? It is amazing how that has shaved off so much of my time and has kept me from having this stack of papers with these notes that made complete sense at the time, but by the time I'm ready to go, what was this again? So that's really worth the price of admission. The issue is the broker dealer I work with, they're a bit hesitant to take on some of the new ones quickly. I understand the reluctance. They want to make sure that the security's there, right? We're dealing with people's personal information. We're dealing with a third party, because who knows what the AI is doing it with it then. So I completely understand why they're kind of slower than most other firms in adopting it. But it can be a bit frustrating, when you talk to colleagues and they work at this firm and, oh, do you have, a friend of mine told me about, I think it's Elevate or Levitate AI. And one of the most astounding natural language programs I came across, like the emails really did sound as if I wrote them, but Osaic has not. That's the broker dealer that I work with. They have not approved it yet. So we're dealing with, Jump. So, and not that Jump's bad.
Right. Boris, you mentioned that you love working with business owners because you can do so many things for them. Can you share what are some of those different strategies you use with business owners?
Sure. Depending upon how the business is structured as an LLC or C Corp, there are certain things you can do. You run into a few C Corps still, believe it or not. And, they're not aware that insurance policy can be used for buy-sell agreements. can be paid directly and owned by the corporation, that they get a tax deduction on it if they have that structure. LLCs don't have that same tax haven. But in terms of the retirement savings plans that they want to take on, it doesn't have to be 401k, although those are pretty good. There are a lot of tests. They can do SEP IRAs, which allows them to put up to 25% of whatever it is that they claim for their income, and opens up the spigot really or the gamut as far as what they want to invest in, right? Versus the bigger a company gets, the bigger the qualified financial plan gets, or the qualified retirement plan. It's more difficult to get a lot of different investments in there, and they're generally pooled investments like mutual funds. A business owner that doesn't maybe leverages AI in a way that I can't, maybe has overseas employees and it's they themselves, they can do SEP IRAs and they could put it all in, I don't know, Tesla or NVIDIA or whatever it is that they decide that they're going to have the best growth prospects going forward. Of course, there are downsides too. 401ks, you can take loans out against them. Can't do that with a SEP IRA. And so that's just a couple examples of considerations you have to take on, the pluses and minuses. That's, I think, what people don't really, really understand. Most people get the idea that, okay, what is the best investment strategy? They leave out the for me part, right? They think that there is an objectively best type of portfolio, and they don't get that an investment, but the evaluation of investment as good or bad outside the context of a portfolio really doesn't make any sense, right? And the portfolio mix outside the context of the overall goal also makes no sense, right? So you actually have to take them a step or two back to remind them, what is the reason we're doing this? What is the ultimate goal? Forget the money for now, right? Right? What do you want to accomplish? How quickly do you want to get there? What fears do you really have? And, what can you stand? What would you rather have? And so this starts really getting at risk tolerance, time horizon. You ask someone what their time horizon is, they'll just come up with a number because they're in the context now of just answering questions. Name, social security, risk tolerance. Yeah, that sounds good. That's critical. People don't understand risk tolerance and time horizon are critical. This is why they're asked. And uncovering what the person really wants is not as simple as just asking them, at least half the time.
Boris, the floor is yours. This is the final question. Is there anything we haven't talked about today that you really want to talk about?
So I guess the one thing I always talk about, the soapbox I get on, and the motto for the companies, it's not just about the money. We try to actually take a step back and try to see what the person not just is trying to accomplish, but what their fears are. Here's what most advisors don't get is that you're likely not the first advisor they've dealt with. And they likely either have heard or know of someone or have directly experienced a negative event. That doesn't go away. If the idea is, I'll just do the best I can and they'll just forget about it. No, phobias are still there. And the client could actually be reacting toward that, irrespective of what you've done, and can color the entire relationship. And frankly, unless you really address it, you won't give the client what they're ultimately looking for. Because it's not just financial planning. It's not just hitting my goal. They're looking for a state of psychological comfort. They want to be able to understand, what? I feel that you get me. I feel that my best intentions are foremost in your head. And I feel that you make room for my idiosyncrasies, right? This is how we show care. This is how we show consideration. Because in the final analysis, they don't necessarily need you. There are a plethora of people out there, right? They can use for whatever reason. And also, unlike other professionals like, attorneys, most people will need to consult an attorney probably at least once in their life on something. Doctors, we will all see a doctor at least once in our lives, right? Financial advisors, there's a percentage of the population that don't need us because they don't, have the issues that a financial advisor would be able to address, right? So now we're all kind of competing for those same individuals, right? So it's a very different type of profession. But what I'm happy to see is that because now, behavioral finance has become more and more in the forefront, we're understanding that, just asking the questions and just giving them, okay, well, I gave them the market returns or I offset their risk. Well, that's what you're paid to do, right? You don't get a cookie for that, right? But if the client walks away feeling good, feeling confident, right? That's a real win. I mean, one last story. I was with a bank 20 years ago, and 20 years ago, 7-figure account was a lot. So the majority of them were 7 figures or more. So the problem when they were that wealthy is that you're one of a few financial advisors you're dealing with. So they kind of play you off one another sometimes. And that left a bad taste in my mouth. It's one of the reasons why I went back, got my CFA, got my CFP. But what really was the reward when I came back is dealing with the people that weren't necessarily as wealthy, but that were wealthy enough and had anxiety about what their next step should be, or weren't even certain that they could do it. So when we run the numbers and show them, yeah, you can do it, and you even have, some cushion here. I've had people literally tear up saying, I never thought I could do it. And yeah, you drive home feeling you've made a difference in this person's life, right? This person's going to sleep better tonight because you were able to show them that. That to me became more important than, oh, I landed another, 10-figure client or something like that. So yeah, that's what I would say.
Boris, if people want to learn more about who you are and what you do, where would they go?
So amenitywealth.com is the easiest way to get a hold of me. You can get the office location there. You can email me directly, and you can check out some of the blog entries that we put up.
Awesome. I love it. Thanks for joining us.
Thanks for having me. Thank you so much.